Welcome to this week's weekly technical analysis. My name is Joel Chandran, lecturer and research analyst here at Train to Invest. And we're going to go over the Toronto Stock Exchange, the Focus 5 stocks that we track, gold, silver, oil, and a few ETFs for the week of November 18th to 22nd. So here you can see is the 3-year weekly chart of the Toronto Stock Exchange. Since July, we've been really on a tear from 12,000 to over 13,500. For the week, we pretty much closed where we opened slightly higher. The MACD and the MACD histogram look good. Histogram bar is slightly lower than last week, so not what we want to see. That's definitely due to closing under 13,500. The trend, though, is continuing to stay strong. We may see some resistance here, as we did at 13,000. You know, we came up a couple times and finally broke through. But again, remember 13.5 is another barrier, so we may hit our heads there before pulling back. Again, we do have some major fiscal issues in the U.S. still that haven't been solved. They've just been pushed away. We're still going through earnings seasons. So a few fundamental things which need to occur before we can see if the trend is going to end or if it's going to continue to go higher. Looking at the RSI and the Stochastic, RSI again is in the overbought position. But again, that is due to the trend being so high. And Stochastic still has room to move higher. So you can see that potentially 13.5, we could break through that and stay above that if the conditions continue to exist where we see some positive growth. Now here is the 6-month daily chart, and the Toronto Stock Exchange closed up $3.01 to 13,478.34. So closed higher than we opened on Friday. Barely. We didn't see a ton of movement this week. You can see here Monday, Tuesday, Wednesday, Thursday, Friday, a bit of a rebound. So nothing too volatile as we are kind of stuck in the 13.5 range. The MACD did cross lower and it stayed lower for the last 15 days, 10 to 15 days. RSI is flat. Stochastic, however, is green, and that's good because it shows the momentum is coming back. But again, I guess it's difficult to have that same swing in volatility as everything is kind of at the higher end of their ranges. The TSX itself, with the volatility and the fiscal earnings and all that kind of stuff coming out, we're kind of in that wait-and-see approach. I would expect a bit of basing right now around this area before we make a move. Now, if the news is good, we'll continue to move higher. But if the news is bad over the next couple of weeks, especially with the holiday earnings retail numbers coming out, it'll obviously come down, and it potentially could come down quite quickly. Here is the TSX versus its constituents. With the Loblaws dropping, we see consumer staples just above the Toronto Stock Exchange, but I didn't include it in this week's analysis because it's not enough to entice me. The green, we have energy, is higher. Financials are doing fantastic, and of course, consumer discretionary. Laggards are still gold, still mining, and still materials. So remember, the money is where the sectors are outperforming the index, and that's energy, consumer discretionary, and financials. Here is the consumer discretionary versus its constituents. As you can see, Magna still the best of the best. A bit of a pullback the last couple of days. Gildan Athletic Wear has some great earnings, so they jumped. And Canadian Tire, again, is outperforming the index. The laggards are still Thomson Reuters. Tim Hortons is looking interesting because it's starting to turn higher. And so that could be something you want to look into. And Shaw heading towards 0%, and that's because telecommunications are having a tough time generating new subscribers. But that's a whole other story. Looking at the energy index, again, we see Talisman being an underperformer, Encana being an underperformer, Husky Energy being an underperformer, Synovus being an underperformer. We have CNQ outperforming the index. We have IMO and Suncor both outperforming the index quite handedly. If you could continue to see Suncor here, while IMO and CNQ headed down, Suncor managed to push higher. So again, this is where the money's flowing within the index itself, with Suncor, IMO, and CNQ all outperforming the index. Last but not least, we do have the financials. This is the financial index compared to its constituents. Now, here, remember the black is the index. The green here, CIBC, underperforming, but again, heading higher. Silver here is Royal Bank, heading lower. This red is Bank of Nova Scotia, and the orange is Laurentian Bank. Red is heading higher, so it's interesting to see how this will go over the next couple of days. The dark green here is TD, bit of a pullback. The blue is BMO, and then we have this turquoise, Sun Life Financial. The purple is Manulife Financial, and National Bank. The financials are doing, the insurers are doing quite well, and despite the warnings of I would say, a housing bubble, there's been news that there may be a housing bubble and things may be coming down to earth pretty soon in terms of some analysts, but the insurers are doing quite well because the Bank of Canada is going to keep their interest rate at 1%, and they can continue to have a higher differential with what they charge and what they take in. But banks, coming up to earnings season, we'll see if they meet or exceed expectations, and that will really help drive the stock high or stocks higher. Here is the price of oil over the last 6 months. As you can see, in the 6-month span, it is plus 88 cents. So not great from where it's been in September, down all the way back down. So it's up 0.94%, 0.94%. And like I said before, I expected it to, base around the $94 mark. It did dip below for a bit, but we've shot up, and we came back down on a bit of a pullback on Friday. But I expect 94 to hold, or around 94 to hold, for quite some time. Looking at the 3-year weekly chart for Enbridge, not the best picture in terms of trend. We were great 2 weeks ago, and last week and this week we have a downtrend. What's also not good is that we see we closed lower than we opened for the week. So a lower close, lower close, lower close, not ideal. MACD and the MACD histogram are indicating that this trend is going to continue. We see it starting to turn down. The histogram bar was the same, and then much shorter. So if the trend continues, we will see the histogram bar shrink again. RSI, Stochastic, obviously are down as we see 3 consecutive weeks of lower closes. Flipping to the 6-month daily chart, a bit of a different picture. We do see Monday, Tuesday, Wednesday was quite weak. However, Thursday and Friday, we saw some gains. EMV closed up 31 cents to $44.35 on Friday. And even though the MACD did have a crossover and it's starting to turn around, momentum is picking up. RSI has turned higher. Stochastic has turned higher, so there's lots of room for the Stochastic to move up after a very steep free fall down. RSI indicating a clear turn signal here, so it may be a buying opportunity for those of you who are hesitant. You may want to take that risk. Again, it would have been great to, anytime it gets too close to this 44 mark, would be a good time to entry point to get in. As you can see, it just took off. I'm hoping for another rise up to 46 would be great, but again, market conditions and news could easily change that. But the RSI and Stochastic both turning higher is a very positive sign, and it does seem like 44 right now is the main support line for Enbridge. So it was 42 for a long time, now it was 43. We're moving steadily higher as we get towards the end of the year. But remember, I have some important decisions that are going to come at them. This is the three-year weekly chart for Imperial Oil. Closed lower than we opened, not great. Not a lot of movement this week at all. That's definitely due to the volatility in oil prices. Last week was good. This week, not so good. MACD is still above the signal line, so it's positive and heading higher, which is good. RSI is flat. And on the long term, remember the RSI and Stochastic aren't as heavily weighted as the MACD and the MACD histogram. RSI is positive, but it's heading down. Hopefully, if oil prices start to rebound as it did during last week, the price of IMO will rebound as well. Again, it is also close to its high-end resistance side, so that may have some influence in how the investors are acting. Looking at the 6-month daily chart, Monday, Tuesday, Wednesday was okay. Thursday kind of peaked. Friday tried to break through 47 but couldn't do it. It closed down 34 cents on Friday to 46.31. So obviously, as you can see, the RSI and Stochastic both quite negative, as the Friday's close was quite steep compared to where it opened and compared to the high. MACD and the MACD histogram, both showing positive numbers there. Difficult to say what is it going to do. It largely does depend on oil. 46 has seemed to be a good entry point here over the last couple of weeks. If it breaks through 46, it's going to go down to 45 fairly quickly, and it could even come back down to 44, where it has a lot more memories before turning around. So if oil prices start to fall through 94 and lower, you will see Imperial Oil and Suncor and just take a bit of a retraction. 3-year weekly chart for Suncor, looking really good actually. 1, 2, 3, 4 weeks of higher, or I guess 1, 2, 3 weeks of higher closes. This week we closed higher than we opened. We broke through the 37.50 mark and closed above that. That's a very strong, well, in my opinion, a strong indicator that some momentum is back with the stock. MACD and the MACD histogram aren't quite so convinced. We do see the histogram bars being very, very tiny, and the signal line is pretty much flush with the MACD line. But another week of positive growth should turn that around. RSI and Stochastic both showing rapid signs of growth. RSI is close to the overbought position, and Stochastic has some room to go before it hits 100. Looking at the 6-month daily chart, Thursday was great. Friday, a bit of a pullback, but we did close just around $38. Suncor was even, so it opened and closed at the same $37.96. So we broke through 37, broke through 37.50, cleared 38 on Thursday, and we pretty much closed at 38 on Friday. MACD and the MACD histogram are showing the strength there, and the RSI and Stochastic were flat because of the no change throughout the day. But it looks like it could be an inflection point here in the Stochastic, and I would expect it to hit higher. We haven't seen 39 in a very long time, but then again, people never expected Suncor to get back to even the 30s. So a bit of a risk, we know, due to oil prices and the support and resistance, but looking at the indicators, it could potentially move higher, especially as we saw the strength on the weekly side of things. Royal Bank of Canada continues to stay higher. 3-year weekly chart. This week, again, pretty much closed where we closed last week. We did close higher this week than we did, or higher than we opened. MACD and the MACD histogram still going strong. Histogram bars are still high. We've seen the last 3 weeks being pretty much the same height. Momentum, bit of a different story, as there's been a bit of a pullback. And I think it's a bit of a pullback because the close was close to last week's close. So obviously when the price drops a little bit, momentum is pulling away. Looking at the 6-month daily chart, tried to break through 72, we couldn't do it. So pulled back down a little bit on Thursday and Friday. You can see how small those bars are for Thursday and Friday, showing there's not a lot of price movement at all. MACD and the MACD histogram are flat. RSI is flat. Stochastic is heading down simply because Royal Bank closed down 9 cents to $71.50, so a bit of momentum pulled away. Again, tough little range here. We could pull back down all the way to 70, or we could just break through 72. I would expect with a bit of positive news over the next coming week or so, we'll break through 72 and continue the rapid ascension that has continued to follow the banks. TD closed lower than open for the week, so not great. In terms of momentum, we see it's flat, but both are in the overbought position. And we could see a bit of a pullback before we break up again. But again, as you can see, very, very steep upward trend here. Haven't broken any trend lines. We're still heading up. So just looking at the MACD and the MACD histogram, you can just see the appreciation will most likely continue. Again, all-time highs here. So you kind of have to change the way you're going to approach the game. 6-month daily chart, we broke through 98 on Monday. TD closed down 42 cents to $97.73 on Friday. So we closed lower than we opened on Friday. Closed just under 98 bucks. But MACD histogram are at this inflection point. I would expect it to maybe potentially cross it down if TD continues to fall. The appetite may not be there for TD at 98. You may be waiting for a bit of a contraction in 96. But it also has the possibility to reach 100 next week quite quickly. But looking at the indicators themselves, I do see potentially a pullback. RSI and Stochastic showing momentum is pulling away from the stock as we head away from the overbought positions. Now, could we pull back to just under to 97, maybe 97.50? I'm not sure. I would expect a bit of a stronger pullback to 96 before turning around. But then again, more good news could just change the market. This is gold. Not a great chart if you look at the far right-hand side of the screen. We thought we were making some progress but last week, but it clearly wasn't the case. Over the last 6 months, gold has fallen $116.40, or 8.56%. So obviously with such a negative chart, even though a slight uptick there at the end, we know the ETFs won't be so happy. Here is CGL, iShares Gold Bullion Fund ETF. With declining prices, we see it's pretty much hit at 11. Prices have bottomed out towards the last support there. MACD and the MACD histogram, obviously negative. RSI, negative, or it's flat, and it doesn't seem to be moving higher. Stochastic, on the other hand, is showing a bit of momentum. We did close higher on Friday than Thursday, up 2 cents to $11.04, so a bit of momentum there. Could this continue? Not. I'm skeptical. Gold prices will have to reverse their trend. They could at the 1250 mark, but I expect gold and even silver to be weak over the coming time, especially as the U.S. will continue to pump more stimulus into their economy. That will really drive prices up or down. They start to taper in December. You can expect gold prices to increase, and silver. Horizons Beta Pro Gold Bull Plus HGU down 15 cents to $7.24. So we closed much, well, not much, but we closed lower than we opened. Not a good sign. We see the MACD and the MACD histogram negative. We see RSI negative. We see Stochastic negative. So it may be a chance to get in. It hasn't been this low in 6 months, pretty much. Looking from here all the way across, lowest point was here before in July, and then it took a bit of a quick upturn before breaking through the trend line. So this may be an entry point for you if you're looking to make a quick gain. But again, you have to be careful because you got to see where gold prices are going. So with the gold bull ETF going down, that means the gold bear ETF has been doing quite well. HGD is up 45 cents, $21.39 on Friday. Peaked on Thursday, but again, closed higher than we opened on Friday. Strong momentum. Looking at the RSI, high. Looking at the Stochastic, crossed up, high. Great. MACD, great. So again, we're probably going to come close to 2250, potentially even break through if gold prices can continue to decline. I would expect a bit of a moderate pullback and for it to base at around this price until there's a clear direction for gold movement. Silver has been down $2.39 over the last 6 months, or 10%, almost 11%. And just like gold, thought it was turning around, but no, it just decided to tank down. Looking at our silver bullion ETF, SVR, up 3 cents to $11.53 on Friday, but again, has been in this downward trend here for the last week. MACD and MACD histogram showing that, unlike gold, the Stochastic and RSI, both flat at the bottom of their ranges, pretty much. I don't expect a lot of movement over the next week or so, and I expect silver prices to either continue to fall or stay where they are. Silver Bull Plus ETF, HZU, down 6 cents to $7.28. Same thing as the SVR, MACD no good, RSI and Stochastic both flat at the bottom of their ranges. You look at Stochastic, you do see an inflection point there, and it's probably going to cross lower if prices continue to fall. I would expect the ETF to stay around $7, potentially break through under, as it did here in July, but not go any lower than this, unless silver prices completely tank. So a bit of more of a contraction, and then it will eventually turn around. Last but not least, we have the Silver Bear Plus ETF. So if the Bull Plus ETF is doing poorly, the Bear Plus ETF is going to be doing great. And as you can see, MACD histogram, great. RSI is above in the overbought position. And it looks like the Stochastic is at an inflection point and is about to cross higher. Room for it to grow to $9. Wouldn't expect that next week. I would expect more like $8.50. So not a ton of growth over the next week, but again, growth nonetheless. There's more room for this bear ETF to grow compared to the gold bear. So that's it for us this week. Questions, concerns, comments, please email me. I'd love to hear you guys comment and respond to that via email. Check us out at www.traintoinvest.com. If you're listening to this blog, obviously you're interested in being your own financial planner, taking control of your own finances, and that's what we're here to do, to help you learn how to do that and to be successful. So check us out. Give us a call at the office here. Talk to Jonathan or myself or whoever, and we'll give you a better understanding of what we do and get you ready to go and ready to be financially free. So again, my name is Joel Chandran here at Train to Invest. Have a great weekend. Stay warm wherever you are. Here in Winnipeg, it's -25, so Yeah, things are cold. Winter has come, and I wish you a great rest of the weekend, and we'll talk to you soon. Bye now.
The organizer